Solana SOL Tests puts the rebound against resistance after a 5-wave decline kept the trend under pressure. The risk is the bounce is not confirmed as a reversal unless SOL can close above the resistance zone near the 50-day EMA. What can be stated clearly is SOL traded near $85.72, while analysts marked $86 to $89 as the key resistance range. The cleaner lens is EMA rejection, not a modest green day. The anchor number is $87.10, while $86.89 shows the scale already visible. That keeps the opening question tight. Can SOL move past daily close without the story outrunning its evidence? A viewer who only sees a modest green day misses why $86.89 and $85.72 define the risk range. The confirmed context is the 5-wave decline has been labeled as wave A, which keeps the broader structure cautious until resistance breaks. It matters because the headline alone does not show how much pressure is already built into the setup. The key baseline is $87.10, while $86.89 gives the story its scale. This prevents the segment from drifting into a generic market read. The baseline is specific, and the next test has to stay specific too. That baseline also explains why $85.72 belongs in the setup rather than the conclusion. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is the 50-day EMA near $87.10 is acting as a filter. A daily close above it would weaken the bearish setup. That is why a modest green day is not enough to judge the story. The test is whether the mechanism survives real pressure, especially around daily close. The mechanism also explains why the same headline can produce different outcomes. If the process behind it is weak, attention fades. If the process holds, behavior can change. The mechanism ties $87.10 to $86.89, so the next reaction is not random. The group with the closest exposure is Solana. Traders exposed to SOL are dealing with a narrow decision point. Rejection keeps consolidation alive, while a close above resistance changes momentum. The consequence is practical. Decisions get made around access, liquidity, trust, or timing before the final answer is available. The story should not be inflated beyond that scope. The strongest reading stays tied to $86.89 and the observable path toward $86.89. $50 day EMA also matters here because it shapes the route from EMA rejection to actual decisions. The confirmed facts do not settle everything. The chart does not yet prove trend reversal. The missing piece is a daily close that holds above the EMA zone. This matters because treating the unresolved part as fact would overstate the story and mislead the viewer. The open side also tells viewers exactly what evidence is still missing. That evidence is not a mood shift. It is the concrete signal around daily close. The proof has to appear in daily close, not just in repeated claims about SOL. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Solana SOL Tests, the next signal is whether SOL closes over $87.10 or gets pushed back into another consolidation leg. 10 or gets pushed back into another consolidation leg. A clean confirmation would make the pressure point easier to read. A failure would show that EMA rejection is still the unresolved center of the story. The closing read is to track the trigger, not the loudest claim. SOL only gets a stronger case if the next signal appears. That is why the final read stays tied to $86.89, $85.72, and daily close.